Hello friends, in this video we will look at one of the very interesting question asked in UPSC exam 2025, which is about, how does RBI earn money? By the end of this session, you'll not only know the right answer but also clearly understand the functions and income sources of the RBI, the central bank of our country. Let's look at the question. Which of the following are the sources of income for the Reserve Bank of India? 1. Buying and selling government bonds. 2. Buying and selling foreign currency. 3. Pension fund management. 4. Lending to private companies. 5. Printing and distributing currency notes. Now, before we dive into the explanation, take a moment to think, which of these do you believe actually bring income to the RBI? Before we answer the question, let us first understand the key functions of the Reserve Bank of India. First, the RBI acts as the monetary authority. It controls the supply of money in the economy, sets interest rates like the repo rate, and keeps inflation in check. In short, it ensures there is neither too much nor too little money circulating in the system. Second, the RBI is the sole authority to issue currency in India. Every rupee note you hold, except the 1 rupee coin, carries the signature of the RBI governor. However, remember, printing currency is an expenditure, not an income for the RBI. Third, RBI regulates and supervises commercial banks, cooperative banks, and non-banking financial companies. It makes sure banks follow rules, stay healthy, and protect depositors' money. Fourth, RBI manages India's foreign exchange reserves. It buys and sells foreign currencies to stabilize the value of the rupee against global currencies. This is also an important source of its income. Fifth, RBI manages government securities and debt. It issues treasury bills, government bonds, and also conducts open market operations. By doing this, it not only supports government borrowing but also earns revenue. Finally, RBI acts as the lender of last resort. This means if a commercial bank is in financial trouble, RBI steps in to provide emergency support. But note, this support is for banks, not private companies. So now that we have a clear picture of RBI's functions, let's move on to see which of these actually generate income for the central bank, and solve our question. Option I. Buying and selling government bonds. Yes, RBI earns income through buying and selling government bonds. These are part of its open market operations. By managing government securities and earning interest on them, RBI secures a steady source of income. Option 2. Buying and selling foreign currency. Yes, RBI manages India's foreign exchange reserves. It buys and sells foreign currencies to stabilize the rupee. In this process, it earns income from forex transactions and from returns on foreign assets. Option 3. Pension fund management. No, RBI does not earn from pension fund management. That responsibility lies with bodies like the Pension Fund Regulatory and Development Authority, not the central bank. Option 4. Lending to private companies. This is also incorrect. RBI does not lend to private companies. It only lends to commercial banks or state financial institutions, and that too under specific circumstances. Option 5. Printing and distributing currency notes. And finally, printing and distributing notes is not a source of income. In fact, it is an expense for the RBI, because paper, ink, and security features cost money. So, looking at all the options, the correct answer is option A, 1 and 2 only. RBI earns mainly through trading in government securities and foreign exchange operations. Now that we know how RBI earns its income, let's look at its larger role in shaping India's economy. The RBI is not just a regulator, it is the backbone of financial stability in the country. Here are 5 key ways in which it influences our daily lives and national growth. First, maintains price stability. RBI maintains price stability. By adjusting interest rates and controlling money supply, it ensures inflation does not rise too high or fall too low. Stable prices protect the purchasing power of citizens and keep the economy predictable. Second, RBI supports economic growth. It makes sure there is enough liquidity in the system so businesses can borrow and invest, while also preventing excess money that could trigger inflation. Growth with stability is always its guiding principle. Third, RBI promotes financial inclusion. From encouraging rural banking to supporting digital platforms like UPI, the RBI ensures access to modern financial services for all sections of society. Fourth, RBI safeguards the Indian rupee. It manages foreign exchange reserves and intervenes in currency markets whenever needed, protecting the rupee from global shocks and sudden volatility. And finally, RBI acts as a crisis manager. During global financial turmoil, such as the 2008 crisis, or national emergencies like the COVID-19 pandemic, RBI introduced special measures to provide stability and confidence to the economy. Remember, the Reserve Bank of India plays a dual role. It maintains stability by controlling inflation and safeguarding the rupee, and at the same time, it supports growth by ensuring liquidity and financial inclusion. If you found this helpful, subscribe for more UPSC-focused explanations and keep learning with us. Comment below for any specific topic you want to suggest for next video. Stay tuned. Thank you.